Well, they did it. It's huge news. It's all over the place. You can't go to social media without hearing about this today. The Fed did lower the Fed funds rate by 0.5%. This is some exciting news, right? Boy, if you listen to people talk about it, you think that the mortgage rates are automatically up a 0.5 point lower. And the reality is that's not the case. There is no direct relationship between what the Fed does and mortgage rates. So bear with me a second and I'll explain it to you. So the Fed drives the Fed funds, the money that the banks borrow the money from the Fed at. They don't drive the mortgage rates. Mortgage rates are driven by the bond market. Now, the reality is that the bond market is going to react to what the Fed says and what the Fed does. Now, in this particular case, we've seen a decline in the mortgage rates for the last 3 to 4 weeks. The bond market has been anticipating. They've been expecting this drop in the Fed rate by the Fed. Now, the reality is, had the Fed not done this, or if the Fed had cut the rate by only a quarter of a percent, they would have missed their projections and we likely would have seen a spike in the mortgage rates. But here they hit the projections. And so the market really didn't even move today because they've already baked in and accounted for what the Fed did. Now, I'm not here to give you bad news. There is some good news. So the Fed has indicated that between now and the end of this year, they're expecting another 50 basis point cut. And then by the end of next year, another 100 basis point cut. So 150 basis points, a point and a half from where we are now. And so what we can expect is a continued decline, continued decrease in the mortgage rates as we finish out this year and into next year. So I think that the affordability, the cost to buy a home or the cost to borrow money is going to go down. That's the good news. The bad news is, I think that as the rates come down, there's a lot of people sitting on the sidelines saying, we're going to buy that new home when the rates come down. So as the rates come down, and we're starting to see this already, you're going to start seeing more and more people enter into the marketplace wanting to buy the homes. What is this going to do? In my opinion, this is going to create more demand for the limited inventory that we have now. And as we have more demand than inventory, it's going to drive up prices. Now, not only do I think that the prices are going to be higher as more people come into the market as a result of lower interest rates, sellers are going to become more rigid, less willing to negotiate, less willing to maybe accept an offer where you got a house to sell, less willing to accept contingencies or maybe pay buyer's closing costs. So this is some good news today. It's not the news that I think that some people are trying to make it out to be. They're trying to stimulate activity and get people all excited and make phone calls. I want to buy a house. I want to get a loan. And that's going to come. But today, the market reaction today, I'm filming this at the end of the day on Wednesday, right after the Fed made their announcement a little bit earlier today, and the market closed at about the same place where it was when the Fed made their announcement. There really wasn't that much of a movement. There wasn't a knee-jerk reaction to what the Fed says. But good news is that we're going to continue to see the rates improve. And so my encouragement is, if you think you want to buy a house, to go ahead and start making those plans now before it gets more expensive. Yeah, you may be borrowing money at a lower interest rate, but wind up borrowing more money. And so if you buy now and we see a big drop in the rates, which I don't really hear anybody talking about 3.5% rates, but let's say that did happen, buy now before the rates drop and the prices go up. And then later on, if it makes sense, take a look at the numbers and refinance. And so just wanted to share this information with you. A lot of people think that when the Fed moves mortgage rates, that the Fed actually drives the mortgage rates. That's not the case. It is good news that we're going to see some improvement going forward, but it's not what you're hearing from some people on social media. I hope this helps.